with the New York entry model, the timings we're going to be looking at is all New York time. So 9 a.m. to 10:55 a.m. And I'll explain why. I've tested 8:30 to 11, which is what ICT says. That's a very, very big time window. Now, from all the data I've collected, I've seen that breaks of structure that happens at 8:30, maybe because of news or high volatility, is more like a trap, a smart money trap, if you want to call it. And usually that leg doesn't really hold, and it goes up and takes out stop losses as a liquidity sweep. And you might have seen that yourself. So I just scrapped 8:30, and I only want to see breaks of structure at 9 a.m. or after. That's why the session timings are 9 a.m. to 10:55 a.m. New York time. Now, the London sweep is a must. So pretty much all I'm looking for is, this is the entry model. Let me just finish reading this actually. So liquidity sweep, we don't want to see too impulsive price action. So if it's something like this, like one straight leg up with tons of fair value gaps here and here, then it can work for sure if we're playing a pullback, but it's not very high probability, and we're all about taking high probability trades and not low probability trades. So this would be a low probability trade. But however, if it was something like this, and then we had this whole entry model, as you can see, this whole piece of price action is corrective, so that would be a high probability trade. Then a break of structure off a swing point. So pretty much the same as a London session entry model, we want a swing point to be broken. We want that break of structure. And once again, a swing point is something with a so a swing low in this case would be a low and a high low to the left and a high low to the right. So we need this sort of like triangle pyramid sort of shape. And same thing applies with a swing high. So then we enter at the OTE level, the optimal trade entry level, that is 0.62% retracement. And we always draw the fib from the 8:55 leg. So first, before I get into the 8:55 leg and some further details, subscribe. No, I'm joking. You can, here's my fib settings, so you can copy this. And these standard deviations here are pretty much just targets, but just target a 1 to 2 or 1 to 3. You should be good. And these are the settings pretty much. We're going to be looking at the 0.62 to 62% retracement. I just have these on for some reason. I can even take them off. But this is the main level that we're going to be looking at to make it simple. So if you've copied that, we can get started. So pretty much this would be an entry model. We have a break of structure right there. And this has to be at 9 a.m. This break has to be at 9 a.m. or after. Okay, so that's one criteria. Next, 10:55. The last candle I want to be tagged in at the OTE level is a 10:55 candle. So if this, when I get tagged in here, if this is an 11 o'clock candle, okay, even if it's 10:57 or something, if this is an 11 o'clock candle, I do not want to be tagged in. I'm removing the trade. If I get tagged in and it's an 11 o'clock candle, it's a low probability entry. So the last candle I'm willing to be tagged in by is a 10:55 candle. So that is why the session timing is 9 a.m. to 10:55. And this has all been back tested with data, which is why I've formed all of that data and made it into this trading plan. So if you want to use 8:30 with news and all of that stuff, then feel free to do so. Just back test it and see what your win rate's looking like. And if you can take those losses or even some wins, then fair enough, you can do 8:30. But if you want a high probability standard plan, just follow this and you should be good. Then another thing is London highs or the London lows need to be swept. So if we are bearish, and to calculate the daily bias, check out my daily bias video. I've had a lot of good comments on it, so I'm guessing it's really helpful, and it's very mechanical too, so definitely check that out. But a London sweep is a must. So pretty much, let's say this is London session, something like this, okay? This is the London high that was created, okay? So the high in London is the London high right there. We want to see the London high if we're bearish. We want to see that get swept, and then we want to see our New York entry model play out. So we want to see this liquidity sweep. Whatever the time, that doesn't matter. All we want to see is the liquidity sweep off the London high, and then we get this move down, the break of structure, the retracement to the 62 level, and then we enter down. And for our entries, it's very simple. Enter there, stop loss above this level, and I would recommend a minimum of 8 pips for a stop loss in the New York entry model for euro dollar. At least I haven't tested anything out, any other pairs out, but from what I've seen, 8 pips is good for euro USD. And then a simple 1 to 2 risk to reward works a lot of the time. So this is the entry model. Now in terms of the 8:55 leg, what am I talking about here? The swing point is not always going to look very generic like this. Okay, sometimes you're going to have something like this. Okay, now this could be the break of structure that happens here. And let's say, I don't know, 10:30 a.m. Okay. But where are we going to draw the fib from? So this is where the 8:55 leg comes up, and it's something that I've discovered, and it works a lot of the time. It's very high probability. So if this is a 10:30 break, then we are going to draw the fib from the 8:55 swing point. So let's say this line shows 8:55. I'll just write that here. 8:55. So this is 8:55, the timing. So after 8:55, where is the most recent, or what was the first swing point? It was this, the swing high. So we draw the fib from this all the way down to here, rather than what I used to do myself and just do it from the most recent thing. So more often than not, it'll go back to this retracement, and it can take our liquidity there as well. We'll come back, go in deep here, and then it can go down like that. Okay, and our stop loss is going to be above here, so we're covered anyway. But that is what I mean by the 8:55 leg. After the most recent one, that is what we are going to be looking for. Now, in terms of everything else, London sweep, liquidity sweep, yeah, that's pretty much it in terms of the New York entry model. I'm just going to show you an example of a trade that I took in New York, and this was quite a while ago actually, New York session. This was in January, I believe, 25th, something around here. Yep. Okay. Let's see if we can go back that far. Yep, I believe this. Let me just confirm it. Yep, perfect. This is the one. So, as you can see, we were bearish on this day. And check out the daily bias video for that, how I'm bearish. But as you can see, this is the London high. We sweep the London high right now. So that is our first criteria, number one. Then we probably tapped into something here, a high time frame, order block, fair value gap. As you can see there you go, fair value gap right there, hourly fair value gap. We literally tap into it there and get the strong reaction. So now that we've had a reaction, all we're looking for is the break of structure. Now, what can you see here? There, 9:45 break of structure, but this is valid, but I remember this was a news break. So if news caused the break of structure, just invalidate that break of structure and look for another break of structure, and then do your fib and the entry model. So when news broke this, I wasn't interested in this because I knew news broke the structure, and those 10 a.m. news as well. So this whole leg was a news leg in a way. So I wasn't interested in taking any trades from here. I wanted to wait after news and then another break of structure, confirm the bias once more, and then enter. So all I was looking for is actually gone, is a new break of structure after this move down after news. So then all I was looking for is this swing low right there. I'll just zoom in on it. This gets broken right there with a body. So now I'm basically ignoring all of this action because this is news. I don't care about that. After news, what is the most recent swing point? This one right here. So I drew my fib from there to there, and my entry was here, 8 pip stop loss there, and a 1 to 2 risk to reward. And as you can see, get tagged in on the next candle right there, and then we just chop around a bit, and then eventually we hit the take profit right there. But that will be an example of a New York entry model. And one more key thing, a bonus tip which I've mentioned countless times on this channel, is you always want to be selling above this midnight opening price and buying below it. So as you can see, where our entry is way above this midnight opening price. It's the whole power of three thing, right? We go up, and then to start with, accumulate the manipulation part. We want to be selling at the manipulation, and then we want to be riding the distribution. It can go all the way down here, wherever. That's according to your trading plan and your risk management. I just do a 1 to 2 to keep it simple and my win rate high. But this is pretty much it. It's very, very simple. And if for indicators, a lot of people are asking me, the session indicator I use is this one, the Asian session range, and pretty much all of this stuff. You can copy this, and then I use this midnight open for the indicator. So every day it marks out the midnight opening price for me, so I don't have to do that. It saves time. And pretty much that is it. So hopefully this video got you some value, and if it did, try it out and let me know how it goes. Test out these entry models, back test it, and gain confidence yourself, because I can only do so much by telling you. Nice, the light went up In, I can only do so much in telling you this, but you get actual confidence when you yourself go and backtest this and see it playing out in the live market. So that's all it is pretty much. This is the new entry model. Let me know if this video was useful, and I will see you next week. And check out my Instagram for daily reels. But until next time, happy trading and stay safe.